welcome back to Global Value. We are going to be taking a look at Thor Industries. Thor trades under ticker symbol THO. Currently, Thor is trading for $82.50 per share. Taking a look at the chart, Thor is down quite significantly over the past year, down 40%. If we zoom out to a 10-year chart, Thor has returned a 9.6% compounded annual growth rate, and even being down quite significantly from last year's high, Thor is still solidly above where it was during COVID. Looking at an overview of the company, we can see that Thor is trading just above this 52-week low, almost half of what it was of its 52-week high. Thor is also a $4.5 billion market cap in the RV industry. So looking at a quick summary of the company, Thor Industries is an American manufacturer of recreational vehicles through its subsidiaries. The company reports through three segments: North American towables, North American motorized, and European recreational vehicles. The North American towable RV business segments operations under the brands Airstream, Heartland, Jayco, Keystone, and KZ. North American Motorized RV does the same through the Airstream, Jayco, and Thor Motor Coach brands. Thor's European RV business consists solely of the Erwinheimer Group, which manufactures both towable and recreational vehicles in Europe. Across all segments, the firm distributes its RVs to independent dealers. Thor has also recently been acquiring RV part manufacturers. The company was founded in 1980 and is based in Elkhart, Indiana. We are going to be doing an 8-pillar analysis of Thor just to give us a baseline of how to think about the company purely by looking at its financials. Starting with pillar number 1, we're looking for the 5-year average PE to be below 22.5. So looking at Thor, we see that its 5-year average PE was actually 16.7, and currently it trades at a 4.9 PE. The company saw a huge spike in its earnings during COVID. One of the things that you really want to consider when analyzing this business and determining if you want to make an investment is this boost in earnings sustainable? If it is, then the company does look quite cheap. If it's not, things might revert toward this, more historical mean. Moving on to pillar number 2, we are looking for the 5-year average return on capital to be above 9%. So taking a look at Thor, they did 32.5% during 2017, 32.5% in 2018, 10% during 2019, 9.3% during 2020, and 19.2% during 2021. This averages out to 20.8% over those 5 years. And like I said, they're at 19.2% return on capital now. So that is a check mark there. They are able to earn high returns on capital. For pillar number 3, we're coming over to the income statement, and we are looking at 5-year growth in revenues. Unsurprisingly, especially due to the COVID boost, Thor has increased its revenues from $7.2 billion in 2017 to $12.3 billion in 2021. So far, so good. We have 3 check marks on Thor. Scrolling down, we're looking at net income. Again, here for pillar number 4, we want the 5-year net income to be growing. So in 2017, Thor had $374 million in net income. We see that it dropped. A lot of this was due to over-expansion and overproduction in 2019, increased from 2019 to 2020, and then had a huge shoot up, $660 million in 2021. So again, that's another check. 4 pillars, 4 checks so far for Thor. Taking a look at the balance sheet, number 5 is total shares outstanding. So we are looking for Thor to be decreasing shares here. We don't want any company to be increasing shares outstanding because it's ultimately diluting your ownership in that company. So in 2017, Thor had 52.5 million shares outstanding. In 2021, they have 55 million shares outstanding. So there is slight dilution going on here. That's going to be our first X. Next, for pillar number 6, we are taking a look at the 5-year free cash flow growth. So looking at Thor's free cash flow statement, free cash flow is cash from operations minus capital expenditures. So breaking this down, in 2017, Thor did $304 million in free cash flow. 2018, they did $328 million in free cash flow. In 2019, Thor produced $378 million in free cash flow, even with their overexpansion. In 2020, they produced $434 million in free cash flow. And in 2021, they produced $397 million in free cash flow. So pillar number 6 is a check there as well. Their 5-year average free cash flow comes out to $368 million a year. That's going to be useful going into pillars 7 and 8. For pillar number 7, we are looking for total liabilities to be below 5 times the average 5-year free cash flow. So again, that 5-year average free cash flow was $386 million. Multiplied by 5, that comes out to $1.8 billion. Here we see that Thor has $3.7 billion in total liabilities, which does make sense, especially as a automotive vehicle manufacturer. However, that is going to be an X. So far through 7 pillars, we have 5 check marks and 2 X's for Thor. Finally, our last pillar, pillar number 8, we are going to be taking a look at market cap and how that compares to the free cash flow yield. So for pillar number 8, we're multiplying that 5-year average free cash flow by 20, and we're seeing how that compares to the market cap. So currently, Thor has a $4.5 billion market cap, and if you multiply that $368 million in 5-year average free cash flow times 20, you come out with $7.3 billion. So quite a bit above what this current market cap is. Does this mean that Thor is a buy at this price? The answer, as always, it depends, right? So even though Thor has 6 out of 8 pillars, you have to be realistic here, and really, you have to understand, you have to dive in, is this increase in revenues, are these increases in net income and free cash flow, are they sustainable? And that's going to require a lot more work. One thing about the RV business is that it happens to be pretty cyclical, especially in the past. Over the past 20 years, there's been a lot of consolidation in the RV industry, which hopefully mitigates some of this boom and bust cyclicality. However, you still need to understand Thor specifically, and you need to understand the RV industry and its demand more generally. The other really nice thing about Thor, and that potentially dampens some of the cyclicality that we've seen in the RV industry, is that they have a huge backlog right now that's currently greater than the revenues that they produced during the last year. So this is definitely something that could dampen that cyclicality and hopefully smooth out the business, especially if it's a consolidating industry and it has more rational capital allocators. My recommendation on Thor and what I'm doing personally is I'm digging deeper. So I'm looking at the filings that Ticker provides. I'm looking at the 10Ks and the annual reports that Thor puts out. I'm listening to interviews with Thor's management, and I'm also going through and reading some of these analyst shareholder calls and looking at the transcripts and reading those transcripts. So like I said, I am digging deeper into Thor. I will be fully transparent, if I decide to make any portfolio moves regarding Thor. Currently, it is not in my portfolio, just to let everyone be up to date there. That's it for our analysis of Thor Industries. If you enjoyed this video, please be sure to like and subscribe, and comment down below what company you want me to take a look at next. Thanks for watching.